Welcome to Profiletraders. This is Reza and you're listening to my market analysis for October the 20th. First, we are going to look at what is happening here with the S&P E-mini 500. Before I go further into the profile charts, we are going to take a look at a daily chart. And on a daily chart from a very long ago, we discussed that it is possible price will come to touch this upper resistance line of this channel and at which point it should encounter significant resistance. So the fact that we went into the earnings season right where this rally started, and the fact that we also got some relief from the Federal Reserve side, the combination of the two things together made the market go up significantly high from a retest of this low to where now I believe we are in extraordinary dangerous level. Extraordinary, because this market has priced in a beautiful earnings season, which so far has been quiet, nasty. You are seeing big names, Alcoa, IBM, Walmart, big names missing, and revenue growth has been abysmal. But yet market is refusing to adjust itself to what bad earnings came out so far, and it is also anticipating an extraordinary favorable Fed outcome, meaning that no rate hikes again for a long unforeseeable future, and that if either or of these two factors do not deliver, this market is wide open to literally come down crashing to the other side of the channel. So any chase of the market to the upside from these levels should be definitely avoided at all costs, because when you get caught, it is going to be very, very fast and furious to the downside. So in the very short term now, the important support is 2012. Once we do break down from 2012, it will mean that we reject all this BS consolidation up there, which was nothing but a ruse to hold the market at a top like that, so that you have enough suckers that would come in to buy their inventory at a very, very high price, and then also hope that holding it up here will bring more brave men and women that would find that buying up here after such a massive move up is still a very good idea, because even if they buy it here, they are probably entitled to more on the upside. So they did a great job. They did hold it. They distributed their inventory. Now let's see if we exit out of this whole situation up there by breaking below 2012. Once we do break that, 2004.5 is next target, and then 97.75, a much more important one and very easily attainable if we do start to break below 2012. As for the upside, this morning my sell zone was 2030 to 2032 against 2034. That's exactly where we stopped. So until we will not break that high, I believe that this high is going to hold for a few days until we start a correction down. As for crude now, it is definitely short term under pressure. And the reason, one of the reasons that is under pressure, we have two things. Number one, we have the slowdown of every big oil consuming country, mainly in Asia, China and everybody around them. Since their economy is literally in a state of a collapse, obviously their needs for oil is not as strong as it used to be. And then the other factor is that when Hassan falls in love with Hussein, many good things can happen. And one of the good things that can happen is that all of a sudden Iran is allowed to inject 1.5 million or so barrel a day into the market. And that oil, of course, it's not coming to the United States at a discount. It is already pre-sold to the Chinese, to the Korean, to the Japanese, and to the Russians. So now we have two factors working the downside, and of course the wild card, which is the madness that can go on any given day, any given time in the Middle East, with some catastrophic event that God could only know what it could be. But there is always that uncertainty from that region now that we remain into play with oil. But the big picture is a very large consolidation, as we talked about it the last time. And the buy zone is near 44.50 to 43.80. Sell zone 50.15 to almost 51. And now certainly we are approaching support, because as this volume down there was quite massive and colossal, the sell pressure was very, very tamed. So unless it opens, or I should say it starts to expand itself in price to the downside from here, otherwise this is possibly signs that the supply to the downside is drying down, and a reversal from here could definitely happen. If it does happen, then there's two POC up there that are main target above 47. That will be 47.50 and then 48.10. On the downside, we have also a POC at 44.84, and then after that it is definitely going to challenge most likely 44, which is my big area of support down there. Now very quickly, gold. Well, it has turned from very bullish to now kind of hesitant, because we did drop. The drop was very well controlled and very well, or I should say very orderly. But now on the way up, there is no momentum at all. So now the market needs to decide if they are going to reject this whole consolidation directionally up, or if they are going to now give us a failed retest of the high that we saw recently, and then from that point on break down. If that scenario happens, of course that there is a lot of room for profit taking and to downside. It did very much so like ES. It came from the same below channel to upper channel, tested it, could not bring in more buyers, and now it's in a correction mode. So now either we are going to break this low here, which is 1165 roughly. If we do that, then it's wide open to drop towards retesting this 1140 area with 1160 as a minor support below that. So this is it. This was Reza with Profiletraders. If you wish to join my trading room, you can get all my courses and 1 year to the trading room for $550, 30 days money back guaranteed. Thank you for listening. Until the next time.